Hello, everyone, and welcome to today's webinar brought to you by Tax Connects. Today, we'll talk about deciphering tax obligations, accurately defining your technology solution for tax and regulatory compliance. My name is Liz Brigson, and it's great to be here today as your host. And of course, there's a few things I'd like to highlight to help you get the most out of the program. So first of all, we really enjoy your questions, your comments, your feedback. And the best way to interact with us throughout the program is to use the GoToWebinar questions feature. And I can see that Beth Anna has already written in, so welcome, glad to see that you're here. And the presentation slides are available for you to download also from GoToWebinar. So if you would like to download those slides and save them for future reference, you are welcome to do that. Hello, Helen, thank you for writing in, and I encourage all of you to say hi, let us know where you're joining from, and ask your questions as we go throughout the program. This is a popular topic. Every time we talk about anything related to sales tax, we field a lot of questions, and the team here today definitely is up to the challenge. So you're welcome to ask questions. We'll save a little time at the end. Hello to Scott joining us from New Mexico, and Helen up in Minnesota. Great to have you here. Today's webinar qualifies for CPE credit, and you can respond to 3 of the 4 polling questions. You'll be able to access your CPE certificate directly from your Corsa dashboard, and that will become available to you 1 hour after the conclusion of the program. If you're on LinkedIn, I would love to connect with you, and I always encourage you to follow our sponsors on LinkedIn and connect with our presenters. It's really a great way to stay in touch and see what's new. And as you have questions or projects that come about in your work, then you know exactly who to reach out to. I also want to say hi to Michael in Fort Myers and Daniel joining from West Chicago. Great to have you all here. Today, it's a pleasure to welcome back Jeff Meggs and Brian Greer, who are both partners with Tax Connects. And I want to give a very warm welcome to Robert Dumas, who is the founder of Tax Connects. Robert, it's great to have you here. Thank you so much, all of you, for setting aside time in your busy schedules to be here to talk to the Incorsa audience about tax obligations. Brian, I'll go ahead and turn things over to you. You can tell us a little bit more about Tax Connects and walk us through the agenda.
Yeah, perfect. Thank you, Liz. And yeah, definitely we got a special treat here with Robert joining us, especially for those of you that have been on our webinars before. You've heard Jeff and I speak quite a bit. So Robert's going to kind of take center stage here today, and Jeff and I will play a little bit of a minor role. But I'd say between the 3 of us, it's kind of scary, but we probably have at least 80 years of sales tax experience sitting in the room. So
that sounds about right.
So definitely, as Liz mentioned, throw those questions at us, and it's probably something we've heard before. But just to kind of give you a little bit of perspective on the business, if you haven't been with us in the past, we do focus in this sales and transactions tax arena. And I say transactions tax to also incorporate the telecommunications taxes, which will be a good part or at least a piece of the discussion here today. When you look at our business, I really think of it in 3 kind of categories as to where we help and support businesses. The first, I really think about it from a consulting or advisory perspective. So a lot of times companies just don't understand what their requirements are. So we help them define, do they have a sales tax? Do they have a telecom tax obligation? If so, where? Do they have some type of historical exposure? How can they manage that more effectively as they move forward in their business? That's one part of our organization. The second piece that we help companies with is in the tax calculation side. So once you know that you have an obligation to collect and remit the tax, how do you get that on an invoice? How do you charge that to your customers? So we have software that automates that part of the process. And then the third piece of the puzzle is, now that you've collected that tax, what do you do with it? How do you get it, report it? How do you get it remitted? How do you manage that ongoing filing obligation? And we support you in that capacity as well. So really all aspects of this, we can support you. That's the commercial for Tax Connect. we'll kind of move on to the agenda. Really, the overarching, I guess, theme here is that the more we've worked with customers over the last probably 4 or 5 years, we see a lot of these software components that organizations bring to market start to kind of sit on this fence in terms of they look like software, maybe the business even thinks it's software, but it sits on this fence and even crosses over that fence into a telecommunications service. So it's what we're trying to do is provide you some examples and some descriptions as to how do we know when this happens and what's the significance of it. And yes, it is a software solution, but there are telecommunications components that we need to be aware of. And it really kind of changes the game when you start looking at having a telecom component associated with your software solution. It changes nexus, it changes taxability, it changes how you charge and bill and collect the taxes. So this should be I think a pretty interesting discussion as we talk about some of the scenarios that we've seen over the years. So Liz, I'll let you pull up the first polling question here for the audience.
That sounds good. Here is our first polling question. We'd love to hear from you in the audience. Which best describes your role? So you can go ahead and let us know if you are a CPA or a tax professional. Perhaps you are in finance, accounting, leadership within a company. Maybe you work on the legal compliance side. We have a few friends in the technology operations division. And if you respond other, feel free to go ahead and let us know what other means to you. It's always great to hear about your roles and the type of work that you are doing.
And Liz, while you've got that pulled up, I'll give just maybe a little bit more background on Robert and Jeff. Just let me know when we're ready to get started with the core content here. But Robert, you've been in this telecom space, starting out with Bell South. Maybe just give kind of a quick background on yourself.
Yes, I am a CPA, and I started in public accounting, but quickly went to corporate America, and I joined the Bell South Tax Department in the late 80s. So I worked at the Bell South Tax Department for almost 8 years before going out on my own and specializing in telecommunications taxation. I did a number of consulting projects for a couple of years and then started a outsourcing business specifically geared towards the telecommunications compliance for large telco carriers. So in the late 90s, I formed Tax Partners, and we were serving clients like AT&T and Comcast and Singular, the very large providers. So my background is almost exclusively transactions tax with a telecom emphasis.
Perfect. And Liz, are we ready to dive in here?
We are, yes. And thank you everyone for responding. It looks like we have a great group today and a good mix of professionals across all of these disciplines.
Okay, I'm going to start by really giving you some definitions. And I have found in my 40-year career that definitions really matter. So many misconceptions and misunderstandings result because people hear the same thing and define it differently. So you're going to hear a lot of definitions today, but some of the three most important ones are SaaS, information service, and telecom service. Those definitions then take you down different paths of taxability, regulatory, and tax compliance, which is why we're trying to be very specific in those definitions. In general, and these are generally accepted definitions, I think you can certainly drill down on some of the specifics and have debates on specifics and nuanced products and services. But in general, a SaaS product is a hosted application that, with your interaction, provides computational results for you, manipulates data to give you a result, does a calculation or something that you can use in your business. Whereas an information service is also a hosted application, but you're retrieving information that is generally available in the public domain, just very difficult to get. For example, if you subscribe to a law service or a tax service and you're accessing that data online, that's an information service you're getting online. A telecommunications service is very broadly defined, and if you read this definition in detail, you'll see that it's broadly defined because today there are so many different means of communications. It's actually become such a part of our lives, we don't even realize the degree of communications we do every day. The primary example of that is the iPhones or Androids we carry around with us and communicate daily with family and business and government and everything else. I mean, it's a part of our life that we're just literally numb to. But communications is an image, a sound, a signal, a radio wave, a wireless, something you can see, something you can't see. And so the definition is very broad. And if you look at those definitions and say state tax statutes or regulatory laws, statutes, you'll also see telecommunications is fairly broadly defined. And that's important for our discussion today. We have found recently, as Brian mentioned, I think in his introduction, that because communications is so generic and such a part of our everyday life, many SaaS businesses are starting to cross into a telecommunications services and don't know it. And part of what we want to do today is to help you, give you the tools to assess whether or not you might be in that situation where you have a product that potentially has a communications or a tax element, a communications element, and potentially communications related taxes. The next slide just shows you some software solutions. They're logos that you're going to recognize. These all have a communications, a telecommunications component, and so their regulatory and tax compliance includes large pieces of communications because they're also providing communication services. I won't list the logos, you can read them and you can see what types of telephony they may provide, but you're going to be familiar with at least one or two of those. The next slide takes it from the opposite position. And these are telecommunications logos that also provide pretty extensive, popular, well-known SaaS applications. So these are telecommunications companies that have to deal with the tax and regulatory associated with communications, but also the tax implications that many of you are currently aware of with respect to a SaaS business. So they understand where the SaaS business may have no tax, where it may have tax, but they also understand the communications tax component as well. Those classifications of SaaS and communications are really critical because your state regulatory and tax jurisdictions define those and treat those services differently. And if you have a communications component to your SaaS business, it's very likely you're going to have a regulatory obligation, meaning you're providing services in the state of Georgia, you have customers there. The Georgia Public Service Commission may need to receive information from you, periodic, annual, quarterly reports showing your revenue data, your voice revenue data, your communications data, so that they can monitor your activities and protect the consumers in the state of Georgia relative to communications. And as a communications provider, you're going to be exposed to many more taxes than you would with just a SaaS business, because there are many counties and cities that are allowed to impose specialty communications taxes. So you could have a California utility tax and a county E911 tax in Texas that you would also have to be concerned about if your communication service requires that kind of taxation. So you really have to have a great deal of knowledge about the potential exposure of communications in the 50 states you're doing business in, just so you can be sure you're properly managing the compliance risks associated with your combined SaaS communications product. Jeff, is there anything you want to add to that? I know you and your taxability studies for communications talk to a lot of customers that are often surprised, I think, by the scope of the tax responsibility. Is that fair?
Yeah, it's very much that way, such that I am sometimes brought in to help map products to a tax calculation engine. And as I'm doing the mapping and I'm looking at the description of the services and the elements of some of the bundles, I start to question, if not realize, there's a communications component to the product and to the service. And it's gotten to the point where I really wade into that cautiously in terms of the discussion, because a lot of times we are talking to companies that have historically only been technology businesses. They're now adding components to their business model that include communications. And there's kind of two reactions to it. One is surprise and maybe a lack of understanding or comprehension of the scope of what that means to the business in terms of compliance for tax and regulatory purposes. And the other is they just can't fathom that we would call them a communications company or a communication service. And so there's usually a good bit of apprehension, debate, denial, whatever you might want to call it. And I understand it. It makes sense. You know, we all live in this, as Robert described, this world of sort of communications and technology today that is far advanced than most of us ever experienced before. And we lose sight of some of the elements of that sort of bleed into this telecommunications or communications environment in and of itself. So I think we referenced in this particular side mixed transactions. I would probably use the term bundled transactions as a definer of one single charge that encompasses multiple product offerings, including a heavy portion of it being pure technology, a small portion being telecom, and that small portion sort of tainting the entire bundle from a tax perspective. And I'll talk a little bit about, maybe during today's conversation, some examples of that.
And the only thing I'd like to add to that, Jeff, is I see with so many of our clients, they don't have any visibility into their billing process. So many of them don't really know how their products have been classified for purposes of determining the taxation. And our businesses change very rapidly. New products, new features are added all the time. And the billing system, unfortunately, seems to be the last thing that gets reviewed and updated. I've talked to a number of clients that said, oh yeah, we reviewed our billing system and our tax type mapping 3 years ago, we're good. Well, maybe not. There's a lot of business that goes on in 3 years and a lot of things that change. And I think that's a big risk point for many of our clients, in that they don't update their tax mappings frequently enough.
All right, so Liz, I think we've got the second polling question.
That sounds good. So I am excited to hear from all of you. What is your current level of experience with telecom tax? You can let us know if you're very experienced, somewhat familiar, aware of it, but maybe you're not sure what it includes. Perhaps this topic is completely new for you. And just reflecting here for myself, I had never thought previously about the intersection of telecom and software. And so many of these examples that you're providing, they are so relevant. They're companies like Slack, they're services that we're consuming every day. So really interesting. Brian, did you have a question you wanted to tee up while we wait for responses to come in?
Yeah, actually, maybe a couple of real world examples outside of the listing, just in terms of businesses that we've worked with specifically. And one that I'll share, when I talk about this and think about it, when we're looking at the various tax and regulatory obligation potential exposure here, I think about it in like three different categories of federal regulatory, state regulatory, and then state and local tax. So here's an example of a company that delivers a streaming service. I know we've talked a lot about SaaS, but streaming, I think, fits into the overall definition here of our technology solutions spanning into telecom services. I think most people would never consider a streaming service to be telecom. Certainly not in the typical definition of what we think of as, our cell phone and maybe a landline, whatever the case may be. But we started working with this business, and this goes a little bit deeper even. They had a tax engine in place that had the capabilities of applying sales tax, but we knew from experience that streaming service in certain states is treated like and is considered a telecom service. A specific example of that is Florida. Florida has a communication services tax that applies to a streaming service. So in this example, the client needed to even change their billing system because they had no way of calculating these telecommunications taxes because their tax engine was really just focused on sales tax. Now I'll bring it back to those three levels of taxation and regulatory fees. That service streaming is not regulated at the federal level, is not regulated at the state level. When I say it's not regulated as a telecom service, but it is treated as a telecom service for tax purposes, and I think kind of hits in some of these classifications and what you said, Robert, the definition matters. It is a telecom service, but it's not a regulated telecom service, but it's taxed like one. And Jeff, I think you might have another example that you could share with us as well.
Yeah, interestingly, we had a client, this is actually a few years old now, that was providing software that performed call routing services. Now, in this specific example, they weren't providing any communication services. They simply built a software application. It was a SaaS model, and they delivered it to customers, and they happened to be in Florida. And you'll hear us talk a lot about Florida, Illinois. Those two states in particular have a fairly distinct difference between the sales tax application, which sometimes applies to telecom in a traditional fashion, and then a communication services tax or a telecommunications excise tax, where the rate differential between the sales tax and these unique telecom taxes is very significant and can be very, very devastating if you're not addressing it early on in the business model. So in this particular example, we have a client who's providing SaaS services to a Florida customer. SaaS is not subject to sales tax in Florida when the hosting activity is performed outside the state or outside the border of the state of Florida. So there was really no perspective that this might be subject to anything other than a potential sales tax, but only if it met some of those citing criteria. Well, Florida has some unique language. As Brian said, streaming services is one example, but there's some unique categories of activities that fit into the mode of telecommunication services subject to that CST, that communication service tax. We kind of sensed this, and we actually went to the state with a ruling request. We wanted to kind of identify how the state was really going to treat this. Their initial reaction was that you're providing a call routing service. We consider that voice communication transmission, and as a result, we consider it subject to CST. Now, we were a little surprised, but not shocked by that. We knew going into the ruling request that it was going to have some potential risk, and what we held back on in our initial disclosure was kind of how the routing occurred. And what's interesting about this particular case is, while it was initially scoped or identified as a significant risk to this business, what we then built out was this model that showed how the call was routed outside the state of Florida to where the SaaS was hosted. And during the SaaS routing process, all of that took place outside the state of Florida, and then a separate communications was transmitted back to Florida. And those transmissions in and out of Florida were through another carrier, not associated with this SaaS provision. So ultimately, while we got a negative response on our first request, as we got into more of the details, we were able to be successful in navigating that. there are other examples that we might talk about today. I'll kind of stop there, but there's this sort of get out in front of it feeling that we as a Tax Connects business feel like is important, and that Illinois and Florida, those two states in particular, can create quite a significant risk for companies if they're not careful.
And to give you some perspective, and you should go home and look at your phone bill, but you pay just an obscene amount of telecommunications taxes, and you're numb to it. You don't even realize the extent of it. But with federal regulation, there's a USF contribution rate of over 30% that is assessed on a portion of your voice communications. In Florida, with that CST Jeff was just talking about, the average rate, combined federal and local rate, is over 13%. So these are really potentially big exposure dollars if you're not properly billing it to your customers, collecting it, and remitting it. So there is some real potential risk here. This is real money. And Illinois is on average about a 13% state and local rate on communication services versus like a 10% rate, 8 to 10% rate for sales tax. So it does make a significant financial difference to you. Did you have anything else to add, or do you want me to go on to the bundling?
No, I think you want to wrap the poll up, maybe.
Yeah.
Oh, okay, sorry.
Yeah, Liz, I don't know if you've already wrapped that up, and then Robert can get to the next slide here.
Yes, yep, I did close the poll. The results are back on the screen for a moment here. We have definitely a mix of experience, about 50-50, and many people who are completely new to the topic. So very good to dive in here.
Excellent.
Okay, as Jeff mentioned, we're really going to be talking now about bundling, the term mixed, where you have multiple services that are bundled into one package, sold as one package for one amount, because that's what the market demands. I know we all like the simplicity of a one package fits all type of product, and that's really what we're talking about today. But as a result of that, you really have to understand in detail what you're selling. And so some of the components of a bundle are what's in the bundle, how do you accurately split the different components of the bundle so that it's defensible if you're trying to argue taxation or regulatory application. How can you accurately type it? And then if you're allocating specific value to a type, what's the process for doing that? How are you determining that your voice has X value, your software application has Y value? How are you doing that? And then what books and records do you need to maintain to validate that you did a thoughtful and thorough analysis of your bundle and you can support it when you're asked externally? So that's what understanding your bundle means. And I think the most important thing is, what are you selling? What does your customer believe that they're getting from you? So how would the customer describe your service? Sometimes we have found that what an invoice or a marketing piece or a website might show as the product isn't exactly what the customer believes they're getting, and is really not the true object of why they're purchasing your service. So you really have to understand all aspects of your bundle, not just how you're presenting it, but how your customers might be perceiving it, because that's going to be important as well. So you do have to look at the marketing. You have to look at your contracts. You have to look at your invoices to see how the product should be defined. And you want to be consistent in all that. If you have big inconsistencies, you're going to just create red flags. So you just want to have consistencies in how you're presenting your bundle, because the true object does matter.
Yeah, Robert, I was going to just add a little bit of a storyline to that. We had a company we were talking to who was in the CRM business, customer relationship management business, had software fairly sophisticated as it was. And what happens, I think, to your point, Robert, about bundling and technology companies is everybody wants to have a differentiator. I can't just be the same type of product as my competitor. And so what happens over time is I start to think about how can I be different in a way that's beneficial and valuable to our client, but at the same time, maybe it's not changing the true object of what I'm selling. And that's, I think, what's creeped into this. And so we looked at a CRM tool that was advancing in terms of how it messaged its components or its database. So it would have a database of clients or a database. Sometimes we might be talking about a school where there's a database of parents or a database of students at a college. And these tools are designed to message out. So not only are they functioning in some sort of SaaS capacity or information service capacity, but they're also engaged in messaging, whether it's SMS or whether it's a voice communication with recordings. And that's where things get, to Robert's point earlier, they get a little bit out of hand without you realizing it, because you've mapped this product that you've historically designed, marketed, and sold for a number of years, and then you start adding to it. And really what you're doing when you're adding to it, I would say you're chipping away at it. You're chipping away at the true object, and you're starting to introduce something that's a little more complex. So I'll talk a little bit about another story like that, but the CRM example was a real live example of a company that really started primarily with a legitimate pure SaaS product, and then introducing those messaging components brought them into that bundled world.
Thanks, Jeff. That's helpful too. The next thing we're going to talk about is transaction type mapping. If you determine that you do have a communications element in your bundle, you then need to drill down on that communications. How is it being delivered to your customer? Is it wireless? Is it VoIP? Is it landline? That all matters. States can only regulate what occurs within their boundaries. So state regulatory issues are all intrastate. So you would also want to see how is your communications, strictly intrastate, or is it interstate as well, where it goes from one state to another? The federal government cannot regulate intrastate, but they regulate the interstate. And so you also then have the federal regulatory considerations of your communication services if they are delivered interstate. The other interesting thing is not all states treat VoIP services as a regulated telecom. So you may provide VoIP services and not be subject to regulation in the state, but you may be subject to the state tax on communications, because VoIP is a taxable communications, even if it isn't a regulated communication. So you need to understand every element of your communication services so you can properly get it mapped and identified when you have to eventually get it billed to your customer. So that mapping, that knowledge and understanding is very important. And one thing to note, sales taxes are generally trust fund taxes. What you collect, you're collecting on behalf of the states. You have a responsibility to bill them. You're not really charged tax on your sales tax you collect. With some of the communications taxes, they're taxes imposed on you as a provider of communication services. You're allowed to recover those taxes by charging your customer, allowed to recover those fees, but those fees then become part of your revenue base for calculating sales tax and for calculating more communications tax. So you need to be sure that that is a consideration in your billing calculations, so that tax on tax is properly handled.
So Jeff and Robert, just a quick question here, and I think this is fairly detailed or nuanced, but I think it's super important as we're talking about, do we have sales tax obligations? Is it just a pure SaaS, pure technology solution? What does it look like when it crosses over this boundary? and I'm thinking about this from a nexus perspective, and we know what nexus looks like from a sales tax perspective. We're typically looking at a physical presence and or some type of economic presence. What happens when we now have this product that we are starting to define at least a portion of it as a communication service? How does that affect nexus?
Yeah, I'll react to that, Brian. Thanks. Historically and functionally, we consider any communication service to trigger nexus. The standard being that we're leveraging infrastructure, and those infrastructure elements attribute to our ability to maintain a market as a communication service provider. So step one in thinking about this or reacting to that question is telecommunications generally is something we consider to be a nexus creating activity in and of itself, equivalent to physical presence. When you're in the SaaS world, if you're hosting that SaaS outside the state, obviously you don't have a physical presence, but adding communication services to that SaaS bundle can start to create a physical presence in the form of communication services. So I think the short answer, to try to kind of stay targeted and not get too distracted by that, is if the first question is, am I providing communication services? And if you are, I would just assume you have triggered nexus and you should seek to comply.
Yeah, it's an interesting nuance in all of this because it completely changes now potentially where you charge tax. So Robert, we'll come back to your next slide here.
Yeah, now we're going to talk about once you understand your communication services and what types you have to come up with a method for determining its value in the bundle. What portion of your communication services adds value to the bundle you're selling overall. And there are various allocation methods, and you need to use the allocation methods that really make the most sense for the business you're in. But they can be based on dollar amount, dollar value. They can be based on usage. If there's a way for you to determine a customer's usage of the communications component versus the software component. What your competitors are doing is important as well. Not that you want to copy them if they're doing something incorrectly or riskier than you're willing to do, but it is a good idea to know what the market is doing so you can compete effectively. Usage, if you're charging your customer or calculating any of their usage based on minutes, that would be a really good indication, number one, that you're probably providing communication services, but it would give you a mechanism for determining value of the communications if you're able to track the usage based on minutes that they're in your application, that sort of thing. So you have to come up with a method for valuing your bundle and the components of your bundle, and that's what this slide is about. And then the next slide is getting your books and records consistent with your bundling valuation methodologies and allocations. You need everything to be consistent within the organization. It adds credibility to your bundle and the way you've allocated the pieces of it. So an auditor is going to have a lot more faith in your processes and what you did to determine the allocation, and that's going to help you under audit if you're ever challenged. So you need to make sure your invoices are not presenting information inconsistently with whatever you determine in your bundle. That your contracts speak to the bundle in the same, and the components of the bundle in the same way that you're allocating it for tax and regulatory purposes. As I mentioned, there's an intrastate and interstate component to regulation, and if usage is your customers are using your product intrastate and interstate almost equally, you need to be able to determine how do you break that down. And some people use an actual usage study or traffic study where the actual call detail records that originate and terminate are used to determine what percentage of the activity overall is intrastate and what is interstate. And those percentages can be used with your federal and state regulatory reporting, and really become a great tool for managing your potential universal service fund liabilities. And universal service funds are a primary regulatory fee imposed by the federal government and the state regulatory bodies. Anything on that, Jeff, before?
Yeah, I always have something to opine on in these kind of dialogues. I know we have a pretty large group on this call, and I want to be clear and differentiate the communication services tax application and telecommunication services in general from traditional sales tax and tangible personal property type sales. What Robert just provided you with was good information associated with the bifurcation of a bundle that includes or involves communication services. Those same bifurcation options or allocation options are not necessarily available, and commonly are not available, for traditional sales tax applications. So there's specific statutory or administrative or regulatory authority that allows communication service providers to bifurcate bundles and allocate the portions of the bundles that are subject to tax versus not subject to tax. That's unique to the communications industry. And so I wouldn't want anyone to take that theory and start trying to apply it across all other sales tax applications.
So as an example of that, Jeff, like if I was providing like a managed service, that's no telecom involved at all, no communications involved at all, but as part of that managed service, there's also a software component, but I'm delivering one thing and I'm invoicing it as one thing. The software might be taxable in the state. The service element might not be taxable, but because I'm delivering it together, it might all be taxable now, and you don't have the ability to unbundle it.
Yeah, you generally don't have the ability to unbundle it. Where you go is down the path of true object. It's a true object test at that point. And I know Robert mentioned that earlier. That's the standard on the traditional sales tax side. And states do differ on true object applicability. Some will say that a mere 10% of what you have is taxable makes the entire transaction taxable.
All right, Robert. Yeah, Jeff, thank you for mentioning that, because I certainly didn't want to create confusion or give somebody the impression that unbundling that we're talking about for communications could apply to a tangible property and get somebody in trouble. That's the last thing I'd want to do. But this unbundling, what I'm going to talk about now is just your key takeaways here. Your unbundling is really going to determine your regulatory and tax responsibilities, your tax compliance responsibilities. That's what makes it important. And if in your unbundling you determine your communications is de minimis or minimal, you may not want to take any action. If you determine that it's significant, you may want to go back and look at historical activity to see when your exposure might have begun. So it's really important to understand your bundle, what the potential implications are. You might have to drill a little deeper into where your customers are, so you can understand and identify the taxes applicable with each state, because the tax responsibilities and the potential exposure is going to be different state to state. Jeff's mentioned Illinois and Florida as two big ones. California is another one. New York is big. Texas is also another place. So you've got to use this information you have then to determine what an appropriate next step might be relative to the way you're now potentially positioning your bundle for regulatory and tax purposes. And we always recommend bring in a professional, legal and tax. We are tax guys. We're not regulatory guys. We kind of dabble in regulatory reporting, but we don't make decisions around getting your particular communication services registered, identified to a public service commission, and all the certifications and paperwork required to make that happen. Get an attorney to do that. So these are big, potentially big tax decisions. And I'll tell you the other thing I think the three of us can speak to is every day we are exposed to a company that is trying to sell its business. And sales tax, transactions tax, telecom tax issues have been identified in due diligence and potentially derail the deal or have to be resolved before the deal can proceed, or is escrowed, and a great deal of escrow money has to be recovered by getting this right. So this is something that you really should react to proactively.
All right, so Liz, I think we've got another poll here, and then I've got a question for my esteemed colleagues.
Excellent. Here's the polling question. What would you say is the biggest challenge when defining solutions for tax and regulatory purposes? That's the question for the audience, and Brian, go ahead and ask your esteemed panel.
Sure. So we're talking about SaaS technology versus telecom, and I know there are businesses, and we see them every day, that they're operating as a SaaS company. We get in these conversations, and it's like, then the light bulb goes off, like, oh my gosh, there's an issue here. If I'm running my business, I'm a software company, everything's going great, what are some indicators that tell me, you know what, maybe I should look at this? And you mentioned one of them, Robert, in terms of if you're billing anything on a per minute basis, and I've seen that a couple of times myself, where it's like, what are you billing based on per minute? That sounds odd. Are there other factors like that that would be a kind of a red flag that I got something else going on here?
I'll just say, if you're paying a large telecom carrier like AT&T a large phone bill every month because you're, in essence, reselling their services or utilizing their service in the application of providing your service to customers, you might want to take a look at that relationship. That's going to be a key red flag. Jeff, what else would you see?
Well, I think that's it. That's the perfect answer. It really is going to almost always have a element of that. Anytime there's any communication of any kind, as Robert defined it earlier, it's pretty broad. It just warrants taking a look and open the package up and see what the elements look like.
Talk to your product managers. If they use terms like routers and lines, any communications lingo, it as a necessity in delivering the product or a component of it, you might just want to question them. So talk to the product managers or engineers, the developers, the people that are actually know the product.
Yeah, that's a good point, because we've seen these, what I'll term like telematics companies, that maybe they have some kind of device in a vehicle to gather data and gather information on how that vehicle is being used. Is it time for an oil change or whatever data that's being gathered? And then all that data is being wirelessly sent somewhere. How is that getting sent somewhere for analysis? There's a telecom component associated with that again, you wouldn't think of anything. I'm not delivering a telco service, so why should I be concerned? But we've definitely seen those telematics companies like that. All right, Liz, you wrapped up the poll there, and then we can go to the next slide here.
That sounds
good.
Good.
What I'm going to do. You're going
to pick on Florida here, I think, some more, right?
Yeah, I am. We've got 4 different examples to show you where you can see the actual financial impact of your decisions relative to the bundling. And so, and as Brian mentioned, we use Florida as the consistent or the control example or the control component in all 4 examples. So the first example we're showing you is you've got a SaaS product, you're treating it all as SaaS, you're ignoring, or you have either determined there's no communications, you're not looking at it, or you're ignoring it. So anyway, you're treating your entire bundle as SaaS, even though it does consist of some voice and some text services. Because it's SaaS, it's not going to have any regulatory, because it's not communications. That's how you're treating it. Also, because it's SaaS, some states aren't even going to tax it for sales tax purposes, which is great. And it's easy to determine the tax base. It's whatever you're charging your customer in full, that's the tax base if it happens to be taxable in a single state. So what's the result here? You got the least burdensome tax and regulatory requirements, which is great. So you don't have those costs associated with it. However, you might add a significant amount of risk to your business if that SMS and voice are considered taxable communications in Florida or other states you're doing business, or with the Federal Communications Commission on a federal regulatory basis. That's what is getting forgotten or ignored in this example. So if you turn to the next page, you see you have an invoice for $100 in Florida. Guess what? You're billing no tax. It's great. Your customer's happy, you're happy. So there's no tax imposed on your $100 invoice for your completely SaaS bundle in Florida. The next example says, okay, I do recognize part of my service is going to be communications. I recognize that it does have a voice and an SMS element. So part of it is going to be subject to federal and state regulatory as well as federal and state taxes. The tax base, I don't have the bandwidth, I don't have the capacity or the data to properly break out the bundle between the different components, different communications components. So I'm going to treat it all as communications. I'm going to take the least or the most conservative, least risky approach, and I'm just going to treat it all as a communication service. Well, what you've done is you have reduced a lot of risk in your business. However, you've increased dramatically your tax and regulatory compliance responsibilities and costs, and you've potentially made your customers angry because they're going to pay their invoice is going to be much higher. They're not going to care what's taxed and what's not taxed, and they're going to compare your invoice to what they can get if they buy the same thing from a competitor. So that's the impact of treating the entire bundle as communication services. And if you go to the next slide, you see there's a $27 tax now added to your invoice. So that's a 27% increase in the price of your product as far as the customer is concerned, because you're treating the whole bundle as communication services. So that's a conservative approach. The next slide is going to be you recognizing the regulatory responsibilities of your communication services. You're not going to acknowledge, or you're not going to address the tax ramifications of your communication. So same bundle, you're allocating the revenue between communications and non-communications, and you're willing to comply with the federal and state USF for whatever that cost is. But for tax purposes, the entire bundle's I'm sorry, I completely screwed up my example. You are treating the entire bundle as communications for tax purposes, but not for regulatory purposes. So it's kind of like the last example, except this time you're going to acknowledge, I don't want to pay that potentially 30% USF rate on my interstate regulatory, so I am going to break out the bundle for federal for regulatory purposes. So you've kind of reduced your regulatory compliance, but you're still saying you're a maximum communication service for tax purposes. So you've reduced your invoice from $27 to $19. So that's the impact of being more precise for regulatory purposes, but not for the communications tax element. So the fourth and final example is you're going to, what I'll say is do it right. You're going to determine the communications element of your bundle. You're going to comply with the federal and state regulatory. You're going to comply with the state communications taxes, and you're going to break out the bundle so that the value of those reflect reality, reflect what really should be subject to regulation and communication services tax. So again, like in the previous example, you've reduced or kind of put a box around your regulatory filing commitments, and you're taking a reasonable tax position. You're not taking too much risk by not taxing it at all, and you're not being so conservative that you're taxing the whole thing. So what does that invoice look like? And it's $9.56. So we went from no tax on any invoice, SaaS service, $27 if you're the most conservative regulatory and tax position. We said $19 if it was a conservative tax position, a realistic regulatory position. And then the final example is you're doing both as realistically as you can from a regulatory and tax perspective. And now your invoice is it's going to be $109.56. And so that gives you an idea of the magnitude of the impact of what we've talked about today. Did those examples serve to add value or confusion?
No, I thought that made.
I screwed up one, I granted. Hopefully I recovered, but yeah.
Well, it's a great example of, and we see this with our clients. I mean, these are not arbitrary examples so much. I have conversations with clients who are doing these allocations, and they're constantly evaluating them. They're doing so primarily as competitive advantage type concepts. They're watching their competitors, they're watching their invoices. So it's relevant, and these things are actually happening and going on. But to Robert's point, the more precise you get, the more capabilities you need to have to justify and substantiate those allocations.
Well, that really concludes the presentation, but the key takeaways, 3 things you need to know. Know your products and service. Know what you're providing to the public, and make sure you're confident in whether it's SaaS only, communications only, or some combination of both. Make sure everything in your business then follows whatever your determination is. Be sure your books and records, your contracts, your website reflect consistently how you've determined your bundle, what your bundle is. And finally, seek the advice of experts, legal for regulatory purposes, and a tax firm, preferably Tax Connects, for your transactions tax issues.
All right, so Liz, I think we got the last polling question, if you'd like to pull that up for us.
We do, yes. We have the perfect amount of time for the 4th and final polling question. Are you interested in learning more about our services? So if you would like to learn more about Tax Connects, feel free to let us know, and definitely excited for you to have a chance to connect with the team. Brian, did you have any thoughts you wanted to recap that before we close the polling question?
Yeah, the last piece I had, and I mentioned it in one of my previous examples regarding the streaming services, is, as you're defining exactly what it is that you're delivering and how you're classifying it for tax and or regulatory purposes, you also need to look at your billing capabilities. And do you have the capability of charging these taxes appropriately? In certainly some of the standard sales tax automation solutions that we all know about aren't going to resolve or aren't going to address these types of taxes and fees. So just be sure that, once you've done that definition, defining what it is, take it to the next step of what does that mean for applying the tax? Do I have the right systems in place? Do I need something in addition or instead of what I have currently? I think that's all I would add to that, Liz.
Wonderful. Well, thank you so much. I'm going to go ahead and close the polling question, and thank you everyone who wrote in We are out of time for today, but we really want to say a big thank you to Tax Connects and the team for taking the time and going over this complex topic with us and really breaking it down, providing case studies and examples to help us understand the individual components. Helen said, thanks, interesting presentation. Want to give you a couple quick reminders as we close today. When you close GoToWebinar, our course survey will pop up on your screen, and we always read and appreciate your feedback. Also, you'll be able to access your CPE certificate in 1 hour. The slides for today's presentation are available on your Corsa dashboard, and later on today, we will upload the recording as well so that you can review the program, share it with your colleagues, and just continue to pursue excellence in this topic. So thank you all so much. Have a wonderful day, and we look forward to having you back with us again very soon. Take care.